Right. First and foremost, thank you so much for joining me today on this webinar on how to manage the cash flow for your small business. As we know, cash is king. You can have all the sales in the world, but if there's no money in the bank, there's no business. Trust me. All business owners know that. Okay. On today's agenda, we're going to cover some housekeeping, a bit of an introduction on who I am, tips on cash flow management, and then Q&A session at the end, and then a small gift if you stay on until the end. So please do. Okay, some housekeeping. The webinar will be recorded and the slide deck will be provided upon your request. Then we're going to cover some tips on cash flow management. So all I ask is if I can just cover the presentation, if you can hold off the questions that you might have until I'm done with the presentation. I'm going to leave about 15 minutes just for you guys to ask any questions that you might have. Yeah. All I'm going to say is that I normally stay after the webinar for about 10 to 15 minutes. Unfortunately, today we're not going to be able to. We have to cut the webinar exactly at 9:30 because my team and I actually have training for sales. And I believe as a business owner, sales is one of your core responsibilities. So that for us is a priority in 2024 to ensure that we increase sales in the business so that we can increase cash flow in the business. So please bear with me. I will be leaving exactly at 9:30, me and my team. All right, a little bit about myself. So I consider myself to be a risk taker. You know, leaving the comfort of employment to starting your own business is not an easy task, but it's something that I did wholeheartedly. It was more of a calling for me and a problem solver. So I am Pamela Nzumo from Nzumo Consulting, where I run an accounting firm where we help small businesses pay little to no taxes legally, of course. We also provide bookkeeping, payroll, as well as business advisory in terms of the financial side of the business. I am a mother of 4, so my household is always busy. My why, like I said, I left employment wanting to climb the corporate ladder in order to help small businesses, because I understand that business owners are great at what it is that they do, whether they are architects or engineers, whatever the case may be. They are good at their profession, but the finances side of the business is not their strongest area. So I found that I can actually add value to them in that area. What I always hope for you on every webinar that I host, I do not believe that there's anything today I'm going to say that is going to be completely new to you. But all I ask is that you take at least one thing that you learned today or have reheard today and actually implement it into your business. You know, you can have all the theory, all the knowledge in the world, but implementation is where the magic really lies. Okay. All right, cool. Introduction. Okay, we're starting. Introduction to cash flow management. Firstly, what is cash flow management? Let's start with the basic. What is cash flow? So cash flow is basically cash coming in and out of the business, right? Now, money comes in the business in a number of ways. The first one is from normal operations of the business, which is from you making a sale and a client paying you. So that's cash into the business. Another way cash flows into the business is if there is an investment into the business. So an investment could be in the form of the directors investing money into the business, or you getting a grant and that will increase the cash flow into the business. Or from financing, meaning that you are getting a loan and somebody is loaning your business money. So that is a cash inflow into the business. And then there's the other leg, which is the cash outflow. So this is now money coming out of your bank. Now, how does money come out of your bank? From normal operating activities, such as you paying salaries, you paying rent, okay, or you buying stock, or you buying equipment, or vehicles. So that will be money coming out of your business. So cash flow management is how does one manage this cash flowing in and out of my business? That's the key thing that we want to talk about today, how to manage the cash coming in and out of your business. Before we dive into some tips and tricks of what you can do in order to better manage your cash flow, let's talk about some common cash flow challenges that a lot of businesses face. As we all know, and this recently affected me personally in my business, where a key client actually paid late, one of the things that I said I was going to do was to trade or to get corporates to be one of my key clients. But even corporate sometimes pays late, because of technical issues within their departments. They have long processes to follow in order to release payments. So one of the very common cash flow challenges for businesses is clients paying late. Another one is with regards to companies that are very seasonal. So meaning that if you run, for example, a resort, and December for you is should result in you getting a high level of cash, right? But because that's when people will want to go on holidays, etc. But then January should be very quiet. But then there are expenses that still have to go through your business, even during the quiet months. So then how do you manage the cash when there is money and when there is no money coming into the business? We'll share some tips. Okay. There are a number of strategies for improving the cash flow within your business. I'm going to share with you some recommendations. Again, some of this you probably would have heard it before, but it's all about implementation. One of the things that I've seen a lot of businesses don't do is to invoice their customers and invoice them on time. If you don't invoice your customers and you don't invoice them on time, how are they going to pay? Also, being clear on your payment terms with your customers upfront. During the time when your customer is looking for your service or for your product, be clear on your payment terms. Be it you want cash upfront. While you guys are still negotiating, while they're still looking for your service, remember, you as a service provider or you who is selling a product, the customer comes to you. So please, we seem to forget this, that this is a two-way relationship. The customer comes to us looking for something. So while they are looking, let's talk about those payment terms. We require a 50% deposit before we provide any service. So that's made clear while the client is looking for our services. We don't want any surprises that are going to result in the customer not paying on time. So be very clear on your payment terms. The other thing that I just highlighted is, have you guys heard of trade credit insurance, right? This is basically insurance in case your customers don't pay you. This is normally something that large companies, well, not necessarily large, but if you have clients that tend to not pay or not pay on time, then this is insurance that you can look out for. You can Google it. There's lots of insurance companies that provide this type of insurance. So this is insurance in case your customers don't pay you. They do require that you have a process in place when you bring on board a client, in order to ensure that this is going to be a client that will pay. And therefore, any invoice that you issue towards that client, if they don't pay, the insurance will pay. Like any other insurance, like car insurance, it works the same way. There are certain things that need to be done to prepare your systems to ensure that, one, you bring in credible clients that will pay. And then if they don't, then the insurance will kick in. And then they do the follow-up process to ensure that the client pays. Another thing is we need to make it easy for our customers to pay us. Yes, I've seen invoices where there are no banking details on the invoice. And then you wonder, how is the client supposed to pay? Now the client must follow up to say, how do I pay this invoice? You know, with the new technology that is happening, on an invoice, at the top, you can click, you can have a pay now button, which can then be directed to the customer being able to enter their credit card or EFT details in order for the money to be taken out. So please make it easy for your customers to pay you. The other thing you can do is you should try to align when you receive money to be when you pay over money to suppliers or to pay rent or salaries. So it makes sense. It makes no sense for you to be receiving money on the 15th, right? Whereas you need to pay your suppliers and employees on the 10th. So make sure that there is an alignment between when you receive money and when you pay over money. Make sure that it makes sense. The other thing that is very important as business owners is it's quite important that we pay ourselves a salary. So pay yourself a salary. Why is this important? Because a lot of business owners, when during good months, right? So let's say a big tender paid out or a big contract, or we got a new significant client. During big months, if you're not paying yourself a salary, you will tend to use up more of the funds in the business for personal expenses than you would if you paid yourself a straight salary. The opposite is also true, meaning that when there is not enough money in the bank, business owners tend to not pay themselves. So being clear and putting it a priority to pay yourself a salary is important. Now, the question will be, Pam, the reason why I don't pay myself a salary is because my business doesn't have enough money. Well, as a business owner, that should tell you that you need to increase your sales. You need to be hosting webinars like I am. You need to be attending networking events. You need to be cold calling. You need to do whatever will work for your company in order to bring in sales, right? So that you can pay yourself a salary. The other thing is, if you have no money, consider purchase order funding. So this is if a tender has come through, as an example, and you don't have money to finance it. Do consider purchase order funding. There's a lot of options on the internet of people who are saying, bring us your purchase order and we will fund it at a fee, of course. They do charge for financing you, because that's what it is. They're providing you with money. The other thing is stock or trade finance. This is if you don't have stock. You can look for companies that provide stock or trade financing that will literally buy you your stock. So they tend to pay whoever your supplier is in order to issue you with the necessary stock. Obviously, there's certain costs involved, right? But at least there are options. If you provide goods and you need to keep stock in order for you to be able to sell the stock, you can look into the trade financing options. The other thing is to pay less taxes, guys. There's so many opportunities for you to pay less tax. Like there's the Small Business Corporation. We do actually have a recording for you if you want to know more about how you can pay less taxes for your business. Again, when you pay less tax, there's more money in the business. Stop paying penalties and interest, because that's unnecessary cash flowing out of your business. Okay. Forecasting and planning. So what is cash flow forecasting? Cash flow forecasting basically says, and this is a service that we offer to our clients. We say, okay, because cash is king, right? Meaning that you could have issued an invoice for R1 million and have 0 rand in your bank. You could have issued an invoice for R1 million and have profit of 500,000 and have 0 rand in the bank, because there's a delay between when an invoice is issued and when cash is actually paid. So what we do is we like any other, like most companies do, is to help you with forecasting in terms of your cash. So we'd look at your bank balance as of today and forecast 6 months into the future or 12 months into the future, so that you can start to see when there'll be times where there will be no money in the bank. How do we do this? We look at the bank balance today, and then we look at monthly expenses that come out. We know every month, depending on the nature of your business. I'll give a typical example. Most businesses have to pay rent, have to pay salaries. So let's say in your bank account today, you've got 20,000. At the end of February, there's salaries, there's rent, there's subscriptions that need to be paid. So if those subscriptions, let's say, come up, if all those monthly expenses come up to say 50,000, if nothing happens in your company, today you have 20,000, at the end of the month, you need to pay 50,000 of your normal expenses. So we can know that if no money comes into the business, at the end of the month, you will be out by 30,000. You will not have enough money to pay your expenses at the end of this month. If nothing happens again, at the end of March, we know that there are those expenses that need to be paid. So now you have an additional 50,000 that you still need to come up with, and you're already in negative by 30,000. We do that for 6 months up until 12 months. What does this do for you as a business owner? It guides you in terms of, I need to make sure that I'm bringing in enough sales into the business, but not just sales, enough cash into the business to ensure that I'm able to cover my expenses this month and next month. Another thing that it helps business owners with is we have a tendency of, when we see money in the bank, to be very generous. I'm talking particularly, we just came from December. A lot of business owners will have won a contract, won a client paid, whatever the case may be. And then they decide to pay bonuses. There's nothing wrong with bonuses, do not get me wrong. But if paying too much will result in the company not having money 3 months from now, 6 months from now, maybe you should pay a lesser bonus, or maybe your bonuses should be target-based, whatever the case may be, right? And we also tend to be generous with ourselves to say that we've worked so hard, maybe I should pay myself extra. However, if you're using a cash flow forecast, you are able to see that if I make this additional expense, additional outflow, what will be the implication in my company 6 months from now, or even 12 months from now? So that's what cash flow forecasting does. It also looks at any income that you're expecting to come in, right? And then see when you might need to do more in terms of bringing in more business into the company. But guys, as we all know, we can plan and plan, and then life happens. COVID happens, like we all know. Or a reliable customer that normally pays on time doesn't pay on time. So having savings as a priority for your business is very, very much important. And you can plan and plan, but having savings is important for your business. Okay. There are a number of tools and resources that are available in order to help you to better manage your cash. Things like your QuickBooks, your Xero, your Sage, that will help you determine what your normal expenses are based on what has historically happened for your, has happened in your bank account. So you can know exactly how much are your monthly expenses by making use of those tools. There's also cash flow forecasting tools. Now, these are the tools that we use that help you plan for the cash in the bank 6 months from now, 12 months from now. There's ones called Float, Pulse. There's quite a few cash flow forecasting tools that you can use yourself, or you can use it together with an accountant. Because what's great about having an accountant is that you have somebody who is going to hold you accountable. You have somebody who's going to say, like, if you do this, this will be the implication. Do you get that? Or help you see a bigger picture, unlike when it's just you and yourself, convincing yourself. Okay, some real life examples of how we are working towards better managing our cash flow at Nzumo Consulting as an example. We now use debit orders with our clients, right? So for the monthly retainer, we are insisting on debit orders. That's because we don't want to be following up with clients to make payments at the end of each month, right? And we are very clear on the clients that we want to work with. So if a debit order is an issue for you, then we need to dig deep into why is that? And then do we really want to work with you? And that's an assessment even you as a business owner should do for your business, is to assess your customers. Surely you don't want to work with customers where you provide a service or a good and then they can't pay you, right? Because you also have expenses that you need to pay. But I must say, a lot of this cash flow management does require a change in behavior in us as business owners. It requires us to know that we have worked for that money and therefore are entitled to it. That's why you should raise invoices and follow up when a client doesn't pay. And to say no to a client who is not paying you, to providing them with further services or products. Okay. So my 2 cents on project-based businesses. Again, project-based businesses, they do have that whole fluctuation in cash, meaning that when there's a big project, then there's money in. I'm assuming this is they've paid. And when there are no projects, then there's no money in. So some of the things that you can do if you run a project-based business is to diversify your client base, meaning that try to find clients who, when it's quiet for one type of client, they are busy or looking for your services for that type of client. So don't just focus on one type of client that you're providing a good or service to. Try to find different types of clients that you're offering. So I'll give you an example in my company. Our target clients are small business owners like you, but also corporates, in the sense that, so now you see we've got 2 types of clients that we're servicing, so that if there's issues with small businesses, then at least corporate will be able to buffer us in terms of cash flow. The other thing is to try and develop long-term contracts with your existing clients. Try to find a way whereby you go into a longer term contract. And again, it is a discussion. It is not easy to have those discussions with customers because they feel like you're tying them down. But entrepreneurship is not an easy thing, but it takes those that are willing to do what it is required for you to get that. So you can ask your customer, if they don't want to go into a long-term contract, what would you require on my side as your supplier for you to agree to going into a longer-term contract? Also offer additional services that are not linked to projects. So things like providing consultations, having webinars like this where you are training people, having online, think outside the box in terms of what it is that you can do in order to provide other services. And then season-based businesses, my 2 cents on that is obviously invest in marketing because your business is crucial for that. And then also diversify revenue streams, meaning find out what you can sell during the quiet months that your customers would be looking for, so that your business stops being so seasonal. When it's quiet, what can you do in order to bring in more sales into your business? You can provide training, for example, right? So start thinking outside the box if you are provide a seasonal-based business. Okay, any questions? Okay, I see you've got questions in the chat. Okay, hi. Okay, cool. Hi, Pam, please repeat the point about hosting webinars as a way to increase sales. I missed that. Great question. So there's different types of webinars you can host, right? And depending on who your target market is, you can host free webinars like I do in order to build credibility, right? In order for people to start getting to know you. And then as time goes by, you can change those webinars to paid webinars. So it just depends on your strategy. My strategy is to say, let me get people to get to know me first. And as time goes by, and for selected topics, they can be paid webinars because I'll be giving additional information type of thing. All right. Okay.
Hi, Pamela.
Yes.
Would you share with us, is there a way or a formula to determine how much you pay yourself as the owner of the company?
So actually, great question, Imelda, and it's in one of our topics that we'll be discussing because it's quite detailed. It's not a clear straight answer, but I've made a note that it's one of the things we're going to be talking about. How much should or can a business owner pay themselves? Ultimately, guys, it's your business. You have the final say. I'll just be giving my
Guideline.
Yes.
Mm-hmm.
Okay.
Okay. Thank you.
Thanks, eh. Any other questions? Any other questions, guys? Yes, Liseko?
Hi, Pam, how are you?
I'm great, thanks, and how are you?
I'm fine, thank you. Thank you so much for the session once again. It was very informative. I wanted to ask, so where can we find the recording for this session as well as for previous sessions?
Zoops will share them with you. Zoops is our business development specialist. She will definitely share them with you. And then also on our YouTube channel, all the recordings go there. Our YouTube channel is Nzumo Consulting. Nzumo Consulting. And then you'll find all the recordings we have ever hosted. But they will be shared with you. Okay, I hope I've answered that question.
So
all right. Any other questions, guys? Any other questions? If you've got any questions, please just raise your hand. Okay. All right. Another thing we'll be sharing with you is the cheat sheet of how to better manage your cash flow. That will be distributed to all you guys for attending this webinar.